This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Tuesday, July 28th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at September corn up a penny and 3/4 at 453.5. August soybeans were down 3.5 at 12.05, and September Chicago wheat was down 5 at 6.55. This morning we had a weekly export sales announcement. 197,272 metric tons of corn to unknown destinations, and that was for new crop 26. Yesterday afternoon, we saw crop conditions. Surprisingly, corn down 4% in the good to excellent category, 63% now. That's versus 67% last week, and slightly below the 5-year average of 64%. On the soybean side, also dropped 3 points, 63%, also in the good to excellent category, slightly above the 5-year average of 62%. Spring wheat held steady, 53% in the good to excellent category. That's still a little bit ahead of the 5-year average there of 49%. And on the winter wheat side, we're 81% harvested, almost getting done there. That was up from 74% last week and slightly above the 5-year average there of 79%. Good morning, fellas. We left the crew here yesterday to man this thing, and it was ugly. I guess we were talking before the show, you got a wild combo. You got what seems to be a changing, evolving weather pattern. You had crude oil down, 10, 12% yesterday. It's down here a little bit, a couple percent here again this morning. And so we've talked about it a number of times, but this thing is, it's going to ebb and flow. It's volatile. We're going to see these swings. I guess, Dustin, what's your opinion here as we start the morning, and then we'll throw around the room.
Yeah, thanks, Dan. I think, we're still hearing from a lot of our base that, there's still a lot of potential for them, even though they've had different crop stressors, up to this point. When you look at that 2-week forecast, it does look like they added, quite a bit of rain in over the last 48 hours in parts of Iowa that are needing it. We're still above normal temps. We still have, the rest of this, this month and early August to go to see what we actually get through that time frame. It seems like it's changing quite a bit. Why were we rallying in the first place? I think it was definitely somewhat weather, but I think what we talked about last time is a combination of everything. It's Iran, it's Black Sea, shipping routes being suspended. It's somewhat weather in the U.S. And I don't know that I think that the weather we've gotten year to date and the forecast we have necessarily points to an obvious above trend line yield. And that's the thing, when you're at record demand, it doesn't necessarily have to be above trend line to still be somewhat supportive, right? If we were to hit a 181 or 180 final yield, there's still some, things to figure out on the balance sheet of what, where are we going to end up, or we make sure we don't push demand too far. If China shows up at all for that, 400 million bushels that we think they could for corn, that would be another big thing for the corn balance sheet. So I see the reason for why the market's setting back. Coming from where we just were, 425, very possible we go back and take that out just because we get into another round of panic. I don't believe, that's not my personal belief that that's the market needs to do right now, though. So I'm kind of cautious and still playing to the situation at hand. If guys have really good yield potential, that's probably a little bit more of an aggressive strategy than guys that are, sitting with kind of an average crop, or certainly if they're at a below average crop, there's different ways to approach it based on their insurance, things like that. And, I think you can start to narrow the pricing outcomes, right? It's not likely that we're going to be way up in the upper fives unless something changes geopolitically, and I don't think that with what we've had so far, we're going to be easily sub $4 corn. This is just my personal opinion.
Hey, Justin, what are your thoughts?
Yeah, not surprised. I mean, I think personally, the fan of the way this market has traded, it's given us a lot of opportunities. We've talked about a lot here, when we had the breaks into June, it gave opportunities to lift hedges when you kind of got into double and triple coverage on the downside. Had a really big rally after first notice day, got a chance for a lot of people to get caught up on sales. So it's been I'll say kind of an ideal volatile window here, the way that we like to, kind of maneuver around these markets and crop insurance. So not surprised that, last week, we're talking about, this is the shot if you want to get caught up. We're going to remain volatile. We're in a classic weather market, in my opinion. What the final yield is, I don't know. But I think it's given everybody, whether you're bullish or bearish, some pretty good chances here, and I am open-minded going forward. Obviously the weather did improve somewhat, so we're definitely in, not in a blown out drought. I mean, we got rained out of our charity golf outing yesterday, so
Bummer.
bummer, but fun time either way.
Mm-hmm.
I think, looking back, when we look back at this year, what the, national yield ends up being, I think what I'm trying to figure out is we've had, so much expansion in the Western belt. There's so many acres out there. And you look at last year, for example, the record yield that we had, all those areas were over the top good, just really perfect conditions. All those dry land acres, I won't call them fringe acres anymore because that's, but there's just so many acres out west now, and those are the areas that have been stressed. And, I think some of the better areas of Illinois, Iowa, the heavy ground got dinged a little bit, early on with too much rain. So again, I think to Dustin's earlier point, you don't have to have a bad yield to be supportive in corn, in my opinion. You just can't have a blowout record yield. So if you start being just a little below trend, I think it feels like you look at Twitter and it's just a complete fight fest on, it's either got to be a 160 yield or a 190, and it's just, there's nothing in between. It's become kind of ridiculous. And then of course, it's like a moth to flame, right? Every time you have a big rally, these people come out of nowhere. They've been dormant for a year and waiting for these kind of markets so they can jump and go over their expertise on what the national yield is. And so I think we hit peak that moment late last week. A lot of people on TV, a lot of people just all of a sudden, kind of Monday morning quarterbacks on how they nailed it, and then we broke. So I think it's just kind of beating people up personally. It's people are buying rallies, selling breaks still. I think the opposite of what you should be doing here is really trading around all those numbers on your farm, crop insurance, where your yields are, where those things hit. When you get too far away from where your safety nets are, you got to get more aggressive on sales. If you break way below it, you lift sales, and just be really disciplined. I think that's been the way to trade these markets.
So in your opinion, we still got a little ways to go here, right? This last 2 days is not the end all be all of, I mean, none of us know, but it's not the end all be all of this corn market. There's still a story to write here, right?
Yeah, I just, bearish or bullish, I don't know from here. It wouldn't surprise me that, we're breaking just back to the moving averages on all of these markets, beans, corn, wheat. We blew to the downside way below them going into first notice day. We rallied 70 cents in corn above all the moving averages. Now we're breaking back to, basically the 100-day today. It's just, it's sloshing around. We talked about volatility. You go from having a bunch of tailwinds with you last week to now you're having headwinds. And then you've got all these, funds sloshing around big. We talked about, some of these numbers that they're trading, 50,000, 100,000 call spreads. And you just realize the amount of money that's out there and how fast these guys trade or get in and out of markets, and to try to attach a fundamental to every move is just, you're just not doing yourself any good.
Yeah. Well, and that's a great point. I mean, you got corn down 14,000 in open interest last night and 29,000 in beans. So highlights your point.
Yeah. I mean, you're just, if you try to play that game with those guys, you're just going to lose in the long run. You just got to stick to, in my opinion, you got to stick to what works, how it works on the farm, be super disciplined, and it works out well over time.
Very good. Ben, want to put a bow on it for us today?
You know, just to kind of touch on Justin's point of all the kind of market banter back and forth and the Monday morning quarterbacking. I think it really reinforces the use of the matrix and looking at that as your motivation or maybe your your reinforcement on how and why you're making decisions. Counter seasonal rally that was a great gift. I'm concerned with the calendar. August is not typically a month that being long grains works out very well. That being said, when I saw the maps changes over the weekend consistently on each run to get a little cooler and less dry, I guess I wouldn't characterize them as wet yet, but less dry. I thought we would be down more than we were yesterday in corn. This morning we had an unknown sales in corn. So we're holding some key technical areas. It'll be interesting to see as the week progresses if we try to make a stab at a higher weekly close, which we've had multiple in a row. My general feel from a trader's perspective right now is you probably can start selling rallies. I don't necessarily want to sell anything in the hole, especially leaning on moving averages. Sub 68 and then sub 62 in corn looks pretty bad. But we're holding for now where we should hold. So don't want to chase it one way or the other. You had a great opportunity to do some things. Market's going to dictate what we're going to do. It's not going to be, Joe Schmo's opinion on yield that's going to change the market. It's going to do what it's going to do. And you got to have a plan in place, whether it's 50, 60, 70 lower from here. And you got to have a plan in place if it's 20, 30, 40 higher from here. That's where I sit.
Very good. I appreciate that, Ben. Ryan, nice job yesterday, buddy.
Thank you.
Fantastic. It was a good show.
Appreciate it.
But you got some splaining to do, buddy. Friday, borders open. What's the deal?
Yeah, it wasn't my fault. So, don't point any fingers. But I mean, yeah, obviously the market was in complete shock. It did seem to catch everybody off guard. I know we're on the downswing, but overall, it did kind of seem that it kind of came out of left field. So we traded limit down in feeders in the back end of the market. So because of that locking of limit down, we're going to have expanded limits in both fats and feeders today. So we're going to have a $16 limit in feeders and a $12.75 limit in cattle. So kind of scary numbers here. Yeah. You don't want to hear that. But as my dad used to say, you always fade expanded limits. So we'll see if that's true or not. See if he knows anything. But anyway, cash trade, definitely on the disappointing side yesterday. Some early trade in Kansas, $2 lower, 228. Nebraska, $3.60, $5 lower. So we still haven't seen the bottom yet. I think at this point, beef prices tried to stabilize a little bit yesterday with choice getting up 165, but overall, it just seems like we're waiting to see if this August seasonal is actually going to fulfill the prophecy and stop this break. So we're going to see if that goes through. I mean, obviously, there's a lot of concern with the longer term implications from the cattle inventory report, from the open border. I mean, everybody's throwing out numbers, what's going to be coming across the border here with a phase reopening starting in Douglas, and then 2 ports of entry in New Mexico after that. So that's going to start in the next 30 days. So this is happening pretty quickly, and the market's definitely going to adjust. Where that puts the price, I mean, it's going to be really difficult to figure that out. But I mean, you got to think that the whole reason we've been really, really rallying outside of just being the tightest supply domestically in 50 years is that the border had a lot to do with that. So I think there's just going to be a lot of caution. Maybe some guys rushing to hedge here who just may have missed the boat, when we were towards the higher end of the spectrum. But obviously, yeah, there's going to be some big concern in the longer term here. Obviously, we're going to be able to bounce back at some point. But I mean, I think that's really going to rule the roost for the trade for the next several days here. And the hog side of things, cold storage report definitely seen as negative. I mean, the surprise build going into the last month. kind of weighing on everything. I mean, we're starting to see a little bit of an uptick here in cash. We were up $1.32 yesterday, but product market still felt a little bit weak. You had bellies down $5. You had carcass down 18 cents. So just not seeing the fundamentals really jumping out here. So overall, it feels like it's been a good move. Feels a little bit overbought. We are seeing the shorts still cover here. But overall, it just seems like the overarching narrative right now is that just because we've seen kind of a bad June and July kind of price action, that maybe things can pick back up in September and October. We've seen it before in the past when we see this kind of liquidation during the summertime. But overall, the product market's really got to stand out here and start showing some better support.
Very good, right? Appreciate the update. We just opened. Fats are a little bit higher. Back end of feeders are down about $3. So on the grain side, September corn's up 3.5 at 455.5. August soybeans are down 2 at 1206.5, and September Chicago wheat is down 3.5 here at 657 is the last there. We appreciate everybody that tunes in on a daily basis. Links in the description. Check out the War Room Report. It's a deeper dive into everything we discuss here daily on the War Room. Also opens up access to premium content, special reports, reactions to USDA reports. So be sure to check that out. Also, a portion of those subscription fees goes directly to support the AgYield NextGen Foundation, which of course supports our national scholarship competition. Check it out. Thanks again to all our viewers here. If you wouldn't mind, throw us a like and certainly subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content, all for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.